The stock market is crashing. I repeat, the stock market is crashing. My phone is having the most activity it has had in weeks, and those calls, they are margin. The margin is coming, and the blood is here. Welcome. My name is Chuck, and you are tuning into the midweek recap. This is going to be a special episode because not only will I go over briefly go over the small bits of big news that has happened during this bloody day, but I will also teach you how to identify a red market, and two, how to stay green in that market if you are not able to short. I know, right? I'm such an informative guy. I don't understand why more people don't hit the subscribe button. But, to each his own. Let's get into it. Now, first of all, I will briefly go over the small bits of news that I suggest you take the time to go over yourself so you could possibly tweak your strategy or play a certain ticker based off of the news that I'm about to share with you. One, Turkey is Turkey is trying to restrict short selling their own currency because their economy is falling. Not their economy. Their currency is falling due to the U.S. dollar being stronger than usual, and they also placed more tariffs on the U.S. as well. And then Warren Buffett, the big time investor, he buys more. He buys more. He buys more Apple. He is bullish on Apple. That obviously shows you if he's buying up a good chunk of it. Not buying the whole company, but his company is buying a good stake in the company to where they're actually noticed. So that's really good news for Apple, in my opinion. And then Elon Musk continues to fight his board regarding him wanting to take his company private. So that's also interesting too. Let's see how that could affect the stock price either way, in my opinion. Right now, obviously, it's down for the week, obviously, but I would like to see how it plays out in the next couple of weeks. If he is able to take his company private or not, I want to see how that affects the stock. But yeah, but yeah, there's that small bits of news, and then I'm going to tell you. Um, then now let's switch over to that that burning thing in the back of your throat. Y'all know that itch in the back of your throat that you can't itch because it's on the inside of your throat. I'm gonna go ahead and itch that itch for you, and that itch is how to stay green in a red market. How do you do that, Chuck? I don't know. Why are you asking me? You should be paying attention to the video. The video guy will tell you how to go ahead and do that. So me, the video guy, will explain to you on A, how to identify a red market, and B, how to stay green in the red market. Now let's go ahead and go to number one. How to identify a red market. You are able to identify a red market because you will have as soon as you wake up, you most likely will have a heart attack. I'm just joking, but mostly all the tickers on your watch list, if they're not all ETFs, if they're mostly common stock, they will be red. Do you see? This is my let me show you both my watch lists, my weekly one and my May one. Look at this. Look at this red. And let's go down to the weekly one. Red. These two green ones right now, those are ETFs, but they're still down like for the week. But yeah, red. That's the first. That's the first way on how you can identify that the market is red. Two, you can check the indexes, SPY and Dow. You see, I always have the SPY pulled up just to see how the overall market is doing, so I can adjust accordingly to how it's moving. As you can see, it sold off this morning hard, and it was kind of due. Not kind of, but most likely due. As you can see, we're pretty overextended on the year, But good news is it has bounced off of the 4 hour SMA. So yeah, that's pretty good if you weren't looking to short sell anything. I mean, if you're looking to short sell, I'm sorry, but yeah, the move already happened. You should have made your money already on that glorious, bloody fall. Now, or you can tune into CNBC, that is the finance channel. If you have the TD Ameritrade Thinkorswim platform for the desktop, you are able to have a small
That are
little
basically up on the year. It
CNBC
seems like there
tab
is a pocket of risk that's being
over
underappreciated right here.
Okay, so let's talk about the Fed. The Fed is
your
moving at
tabs,
a
and that's
very
pretty
measured
cool if you
pace,
ask me.
and that's a
And
good
as
thing.
you saw
The Fed is
that,
now talking about
worse
where
not
the neutral
over.
rate is. So they're driving down the road. They're saying, okay,
If you
where
really
do we
want to
stop?
see
The Fed is also
if
talking
the
about
market is doing
pausing.
bad
That's
without
constructive.
even having to
And Powell
check
has been doing a good job.
um,
Pockets of weakness, you're always going to get
your
pockets of
broker,
weakness. What we
just
saw in
go on
earnings season is
Google and look
if you
how
miss
and
numbers,
just look up
there is
the
a big
indexes
penalty
and
for
see
that.
how they're
The
doing.
market, again,
Or
is
you just tune
discriminating
into
between good and
CNBC
bad.
and
I
you
don't know
watch
how to
one of
put it
these and
any
you just
simpler.
hear these
But
airheads
when you look at the
talk
market
about
in
how the
its
market is
totality, when you
crashing
look at
and
earnings, you look at the economy, you look
somehow
at
they're
valuation,
magical in
and when
some
you
sort of
look
way
at
and the market
sentiment,
starts crashing.
sentiment is
Or it's
people aren't
already
all
crashing.
giddy, they're
See,
not all
worse not over
excited.
yet. Look
Leverage.
at that. Look at that. That just scares. That scares new traders. It doesn't scare old investors, but it does because new traders are going to start to pull out because they're scared because they don't know what to do. But luckily, if they stumble upon this video, they'll know what to do. So let's get into the real main portion of the video. How to stay green in a red market. Well, there are about several ways that you can stay green in a red market. One, the obvious choice, is to short. If you are not able to short, I apologize, but shorting is basically betting against a certain ticker. You're buying high and selling low. You're doing the inverse of what you would do if you bought it as a long. Now, the next way that you can survive is playing a bearish inverse ETF. Here, let me show you an example. Because a certain amount of ETFs, such as commodities, and certain indexes, they have inverses, bullish and bearish, bullish and bearish, bullish and bearish inverse. I'm so sorry, I cannot talk today. I'm trying to make the video as fluent as possible, while also being entertaining without having the ability to edit, because I'm still learning on how to edit on my newly acquired Adobe Premiere 6. So new videos should be coming out. No, not new videos, better videos should be coming out. Yeah, I should say that. But let me give you an example. JNUG and JDST, those are the bullish and bearish ETFs for gold, and they follow the commodity, /GC gold. As you can see, let's look on our 4-hour chart. Gold is not doing so hard. It's on a consistent downtrend. Now, how the heck do you stay profitable when this is continuously going down? Well, like I said, it has. Oh, I'm sorry, I just dropped my mic. Let me stabilize it real quick. Okay, that's better. Now, you're probably asking, well, how do you stay profitable when it's consistently going down? Well, you play the inverse, which is ticker symbol JDST. Look at that, see? The reason why you play the inverse ETFs is because one is always green and the other is always red. So if the market is red and you're not able to play your common stocks, or the stocks that you want to play are red and you're not able to short, but you still want to be bullish because you're a bullish trader, I would recommend that you learn how to trade both sides of the market, shorting and going long, because that can only help you. There is no, I don't think there's a real negative to learning how to trade both sides of the market, in my opinion. But if you still want to be bullish, like me, because I'm not able to short yet, you can play the bullish inverse, the bullish or bearish inverse ETFs, depending on which one is going up or down at the time. And let's go to another one. This is the oil. This is the oil inverse ETF DRIP and ticker symbol GUSH. As you can see, DRIP is on the obvious uptrend. Let me give you a trend line. DRIP is on the obvious uptrend, so that means GUSH is on the obvious downtrend. And DRIP and GUSH are correlated to oil. And the oil report came out today, and there was a lack of demand. So in turn, that would decrease not only decrease the price of oil, but it would also make this certain ETF and all other oil related ETFs and stocks continue to trend down because they're all connected to oil. And that's the second way how you can stay green. The third way how you can stay green is you can trade the volatility index, such as TVIX or UVXY. Now, if you trade these two tickers, UVXY, hold up, UVXY. If you trade these are volatility volatility ETFs, and these go against the market. So when SPY is when SPY is red, that means the TVIX and UVXY, they're going to be green. Now, for an example, let me show you. Let's go on the 1 minute chart right here. As you can see, an obvious bloodbath in the morning. Now let's go to ticker symbol TVIX. Oh, look at this, a monstrous uptrend in the morning. You see, you're still able to go bullish while being bearish at the same time in a red market. Now, see, look at that. 13% right there. That would have been my week if I did decide to trade that. But understand that this moves, this is not only very volatile because it is connected to the SPY, but it does move very fast, which is why most of the times I'm hesitant on if I want to trade it or not. But this morning I should have taken a position on it. I really should have. I'll tell you what I took a position on in a second. Hold up. And then look, I also should have took a position on JDST. Look at that. About also about 13% if I bought at market open, because JDST, like I said before, is connected to gold, the commodity, ticker symbol /GC. And as you can see, gold has been on an obvious downtrend for about I want to say a couple of months now. So that means JDST would be the stronger one to buy and get into, but I just never took the time to get into it. But now I'm starting to see that this is a more serious case. It just keeps making lower lows. So I might play that tomorrow and hold it until let's see, Friday, depending on how everything plays out tomorrow. So yeah, those. Oh yeah, and the fourth way to stay green is don't trade. I mean, you're not staying green either way, so I would be wrong on that. But the best trade you can take is no trade, and you'll hear a lot of big time traders say that the best trade you can take is no trade, because they're right. If you don't know how to play if you don't know how to play a specific market, then and you're not comfortable, then you shouldn't trade, because then you'll start to make irrational decisions, and in turn you'll start to lose money, which that's not our goal. We're not trying to lose money here. So now that the main part of the video is out of the way, let me wrap it up by telling you what's going on with me during the week. I made a total of 2 trades, and I am down 2.77% for the week. Let's see. Let me show you the first one I traded. Let's see. Where's it at? I'm looking up. I'm looking it up on my phone right now, Robinhood. Oh, it was GPS, ticker symbol GPS. I had this one on my watch list earlier this week, and I got in because it did confirm an uptrend above the resistance at 31 right here, and it completed a good amount in one day, about 5%. I did, but I got in around, let's see, I'm pretty sure it was 31.50. I would have got in here at 31 once it pushed up above and pulled back and made that confirmation. This is what we want to see when we have a certain ticker that we're looking at. We want to see it push above our desired entry point, which is most likely going to be a resistance point, and we want to see it go over and trend back below and confirm that resistance as support, which it did right here, and then start to trend back up. And then that's where I would have bought in, but I still wanted to wait on a better confirmation because the market was also shaky that day. So as you can see, made a total of about 5%. Oh well. And then I got in this day, and then the next day, and then the next morning, it immediately sold off. I said I waited for a bit because things can be a bit volatile in the market in the morning, extremely volatile. And then on this rise back up right here, that's when I sold because I saw that the MACD was still low, everything was still weak. So I was like, all right, I get out. And then I got out with just a small gain, like about like $5, I think. Nothing too jumpy to talk about. And then let's see, I day traded. Oh yeah, I screwed up. Make sure you always check if you have day trades during the week because I plan to day trade something else on Tuesday. But I figured out that I had a day trade already in, so I'm like, oh, this does not work. I mean, I still had 2 day trades left, but I thought I had all 3, and I had a plan for all 3 of those day trades, but obviously that didn't go out as planned, and now it was a simple mistake made by me. I shouldn't have made it, but now currently I am out of day trades, and that is not a position that anybody would want to be in. And that was just me. That was just me not knowing about my current position with my the amount of day trades I had, which is a big beginner's mistake on my part, and I paid the price for it. So, oh yeah, and then I traded ticker symbol Gush today. No, I got in a total of 3 positions, and I lost on JNUG, which is the other one I got in, the one that was downtrending. I'll tell you why I got in that in a second. And then ticker symbol Gush, I got into today because I saw that it was selling off, but the index the commodity that it follows, oil, I saw that it was starting to trend up, so I adjusted my plan accordingly. Here, let me pull up the middle VWAP. My plan was to trade it up to the top of the middle, to the middle VWAP at least. So I did get it. I did take a stake in Gush around. It's about 30, 20, and then I was holding, and then I just saw that it just kept getting nowhere. It just kept getting rejected at certain points, so I just decided to sell off with like a 1.57% loss. That was a mistake to trade. I should have been more patient in determining if it was ready to start trending back up. But that's also why you may or may not want to follow the VWAP. It works sometimes, but it does work sometimes. Overall, I mean, the middle VWAP was acting as resistance, not as support. As you can see, I should have what I should have done is I should have waited for Gush to trend above the VWAP and get to the top and then get rejected and come back down, then I should have played that. I shouldn't have just played it as soon as it crossed the middle VWAP. That wasn't a good enough confirmation, but that was just me being anxious, making another simple beginner's mistake. I'm not going to lie to you. I'm going to be transparent as possible, so I can not only help myself understand the mistakes I did, but I can also possibly help somebody else that is making the same mistakes, and hopefully I can clarify that the mistakes for them. So let's go to ticker symbol JNUG. This is gonna be the last one down. This is gonna be the last one. Then I'll just clock off for the day. But let's see. When did I trade this one? I did trade it yesterday. I know that. Today is currently Wednesday. Pretty sure I traded it yesterday because I got my third day trade today. Okay, yeah. So I bought in at 9:94 at 2:08 p.m. because I was anticipating the break above 9. Wait, was it at 2:08 p.m.? Let's see. Wait, the 13th. Wait. Oh no. Okay, no. I bought JNUG on Monday. My bad. Oh yeah. I bought JNUG on Monday, and then I'm pretty sure I also bought GPS on Monday as well. Oh no, I bought it. No, I bought it yesterday. Oh, I have my whole week confused. No, okay, I day traded JNUG on Monday, and then I bought GPS on Tuesday, and I sold it. I sold it today when it started to continue to trend down. Yep. Then GPS limit sell, stop loss sell on the 15th on Wednesday. I really don't remember that. What the heck? Okay. But besides the point, I bought it on Monday. Let's go to Monday over here. Yeah, okay. I was waiting on the anticipation for the break above 10. I wanted to get in at around 9.95 and sell at 10 around 10.15 because that's where the middle VWAP was pointing to at the time, and that would have covered about 4 to 3%, which would have been fine to me. But my mistake was it had an obvious resistance at 9.95, but I still got in at 9.94 for the anticipation for the break because I was betting that it was going to break because of the amount of volume and the way the MACD was looking. But I should have waited on better confirmation when it not only when it broke 9.95, but when it broke 10. I should have waited to get into there, but that was me not only being impatient again, but also anxious. Beginner's mistakes. You never learn. At least me. I do not learn. I'm trying to get better every day. But yeah, that's gonna be it for the video. So overall, just trade inverse ETFs or trade volatility ETFs such as TVIX or UVXY, or short. And those are the 3 ways that you're able to stay green in a red market. And then I took a total of 3 trades this week, and I lost on 2 and 1 on 1. I am down 2.77% for the week. And my plan for tomorrow is to trade the natural gas report and hold it until Friday, or to trade an inverse ETF. It's possibly going to be DRIP if I'm going to choose that because it's because oil is doing poor, and if you go online and look up the analysts report for oil, 12 of them are saying they see a decline in oil demand and prices. So that's why you would want to play DRIP because it's the inverse of Gush, which is the bullish. And you want to make sure you follow the trend. And right now, oil is bearish, so you would play the bearish ETF. So that'll be it for the video. I'll see you guys later. If you have any questions, go ahead and DM me or comment down below. Don't forget to hit that dislike button. And don't forget to subscribe as well. Only if you learned something. I don't want you to like or subscribe if you didn't find any value in this video. But I would like you to dislike so I can have so I can start a small group of haters, because I need some more haters to motivate me, you know, telling me I suck, telling me I'll never make it, just every successful person, they have haters. So in turn, if I get haters, I'm gonna start being successful. All right. So yeah, see you guys later.